advice. And I think after what they've learned last year, that it is a very difficult market. There's a lot of profits out there. There's a lot of good quality stocks trading at very reasonable prices.
Rule number 2, diversify. Invest over a period of time.
What I would recommend is not putting all your money in the stock market at once, all right, in one chunk. Like if you sell a home, you sell a piece of property, maybe you get a large inheritance. It's not wise to put the money in the market at once.
Rule number 3, beware of any overvalued stock.
If they are overvalued, they probably won't be overvalued for all too long. People should be a little bit more cautious. They should be reasonable with their expectations. Companies can only grow so fast.
Rule number 4, know how much money is going into the riskier versus the more conservative issues. Chris says the bottom line, the dust is settling, the smoke clearing after a tumultuous ride. So there are still deals to be had. For Money Talk, I'm Judy Martin.
And for more tips on heading back into the marketplace, you can log on to news12.com, follow the links to Judy's Money Talk.
Well, what a difference a year makes when you look at the various stock exchanges. The NASDAQ shed 40% from last year's euphoric highs. The change in fortunes was even part of the Super Bowl commercials last night when E-Trade spoofed a number of spectacular .com collapses. This spot showed a monkey leading a horse, then shedding a tear when the sock puppet's business succumbs to the wrecking ball. Chris Castaldo says the point is that .coms which follow the old rules will prosper.
I think there are certain .coms that are doing very well now, and I think these are the larger name .coms, the America Onlines, the Yahoos, or perhaps even the online division of a brick-and-mortar company like a Toys R Us. I think the companies that aren't earning money, like a Pets.com or maybe a Garden.com, they fall to the wayside, down to the doldrums such as a Priceline. I think we're going to an old economy valuation, and that's quite simple. You either earn money, you put profits on the bottom line, or your stock's not going to do well.
Castaldo says the .com business remains a great opportunity as long as the fundamentals are there.
Millions of people do not have power, and the storm has made gasoline scarce. In Houston, some willing to wait 4 hours just for a few gallons of gas. If you filled up in the last few days, you've noticed right here in the island, prices have gone up. News 12 Long Island consumer reporter Andrew Enger tells us why.
From Texas to Long Island, motorists are feeling the Ike hike.
I think it's gone up like 25-30 cents in the last couple of days, at least.
Gas prices on Long Island have been rising before Hurricane Ike blew ashore in Texas. At last check, gas here averaged $3.88 a gallon for regular, $4.05 for mid-grade, and $4.13 for premium. But that's still lower than this year's high of $4.35 set back in July.
Well, in our area, certainly there's no justification for prices going up as they have.
Critics contend that even though several Gulf of Mexico oil platforms and refineries were damaged by the storm, Long Island gas is refined in the Northeast and shouldn't see such price spikes. But station owners say they're at the mercy of the big oil companies' pricing plans.
It has nothing to do with price gouging. If the price goes up, there's no way to hold the price. You have to pass it on.
So what about price gouging? Well, station owners say they're not doing it. But the state attorney general here in New York says drivers need to be on the lookout. So why then do prices go up so fast but fall slowly? Well, station owners say they raise prices quickly in anticipation of the next expensive truckload of fuel, then lower them once the expensive gas is sold. And that can take some time. Still, motorists aren't happy.
It's $100 to put gas in your car. I don't know how people afford it anymore. It's destroying our economy.
And that's from a guy driving a Maserati. In Jericho, Andrew Enger, News 12, Long Island.
Now, if you
is it affecting Long Island? Our guests are Dr. Erwin Kellner, the Weller Professor of Economics at Hofstra University and Chief Economist of North Fork Bank. Michael Fliegelman, a financial planner and President of Innovative Planning Services. And Christopher Castaldo, President and CEO of StockTradersPress.com. Here's your host, Lee Tyrell.
Hello, everyone. Welcome to At Issue. It's been another rough week on Wall Street. Many an investor has winced listening to the financial reports, and it seems every day there's a new corporate fraud scandal helping to push the market bottom everybody's waiting for further and further down. But now more than ever, it's a good time to step back, take a deep breath, and review your 401k retirement plan. As News 12 Long Island Scott Feldman reports, the experts say this is just one part of any good investment strategy.
every time I look, I've lost more money than I've put in.
After years of double-digit gains, Joe Marriott and millions of other Americans have seen their 401k retirement assets plummet.
It started out at $19,000 and went up to $87,000 in 2 years, and it's dropped right back down to about $40,000.
The Money Pro's advice? Investigate the past performance of your investment options. Even a good fund can have a bad year. Take advantage of any matching contribution your employer offers. Make sure your asset allocation fits your risk profile and rebalance gradually. And compare the top holdings of your funds to avoid duplication. Financial experts say you've got to have a life strategy, and depending on such factors as your age, income, marital status, that strategy will change over the years.
Really, this is all about right now is there's a lot of emotion out there.
Michael Fliegelman is a financial planner. His approach is three-pronged. Protection, meaning insurance policies. Savings, such as credit